A trap has been set in the mortgage industry that very few people understand, and a lot of people are falling for it right now. Refinancing is booming ever since the Federal Reserve dropped interest rates. But I hate to tell you this, but the 30-year mortgage has not dropped. It's actually went up a little bit. The fact of the matter is, the media is reporting right here, and this article is right out of Yahoo Finance. Mortgage applications hit a 2-year high as refinancing surge. And there is a serious trap that people are falling for. And we're going to talk about that in just a second. All right. We're going to go down here because of this. This is why I made the Mortgage Master course so that people can learn everything about the mortgage industry, how to save tens of thousands of dollars on refinancing or getting your next home. Because these lessons are not taught in school. If you want a link down to it, I'll throw an 80% off link down below for the next 24 hours. Check this story out, and then I'm gonna tell you the traps that people are falling for right now. So if you're about to get a refinance, stop for just a second, listen to this, listen to the reasoning, the logic I show you, and I'm gonna help you save money. Mortgage applications have just jumped to the highest level since July of 2022, driven by homeowners seeking to refinance their loans as rates drop. So first off, I want you to understand there's only two types of people that would be refinancing in this market right now. That is people that bought mortgages at higher rates than they are currently, right? So they've been buying homes or refinancing their loans, and they need to get out of those current mortgages over the last year and a half or year, let's say. The other type of person are people that need cash out refis, and those are dangerous anyway, but it's because they can't physically make it in this economy. They don't have enough money. They're living paycheck to paycheck, and they're trying to get some breathing room, okay? So both of those type of people right now are desperate. All right, it says here, applications to refinance or purchase a home in the week that ended September 20th rose 11% week over week, according to the Mortgage Bankers Association. Refinancing applications jumped 20% during that period as more consumers sought to take advantage of falling mortgage rates. So let's take a break from that. Now let's dissect that. Week over week means nothing. It means nothing. Year over year numbers are impressive. When you're taking a snapshot of, let's say, a week or a month of the year, let's say September, right? To compare it to last year is a much better way of looking at things. The only reason those two metrics jumped up last week was because the Federal Reserve came out and said, we're lowering interest rates by 50 basis points. It's massive. And people ran to their mortgage broker and they said, we heard rates went down. Do you think for a second most mortgage brokers are going to go, no, they actually went up? Because that's actually what happened. No. See, mortgage brokers, by and large, not by and large, they only make money if you get a loan through them. End of story. So while they got you on the phone, they're going to keep you on the phone as long as possible, because the more they get you saying the word yes, and they keep you talking, the more likely you are to come in for a refinance. And mortgage brokers have all kinds of different programs. And one of those programs are a rate buy down program that most people don't understand, that they're paying thousands and thousands and thousands of dollars that they're never going to get back, only to see that pretty soon in the next couple of months, you're actually going to see mortgage rates actually drop. And then you're going to be bummed. And you just blew, actually on average, around $18,000. That is true. The average person spends around $18,000 between points, discount costs, escrow fees, and all that kind of stuff on a mortgage refinance. And that is disaster. But sad thing is, they just do it anyway, because it's simply those fees are just tacked onto your loan. It's absolutely horrific. And that's what I want to teach people, how to save all of this money, because saving money is making money. So let's dive back into the story a little deeper. It says this is the second consecutive week of double-digit application gains. Refinancings made up nearly 56% of applications as the typical summer home buying season wraps up, according to the MBA. As a result of lower rates, that's not true. There is not lower mortgage rates on 30-year fix. If you compare 2 weeks ago to today, they're actually higher with 0 points. Like comparing apples for apples, all things being the same, rates on 30-year fixed loans have gone up, all right? But if you're getting talked into something very scary, like a rate buy down, you are paying for that. Rest assured, you're absolutely paying for it, even though you don't see it. And you're probably signing something you don't understand. And this is the kind of information I am teaching people so that they walk away saving thousands of dollars in closing fees right away, tens of thousands over the next couple of years. And then that's just your first house. What about the next house and the next house, or your first rental, or your 10th rental? It says here, on average, the rate on 30-year mortgage dropped steadily over the summer, falling to 6.09% as of September 19th. So, so they use a number, a metric that they said over the summer it fell. It didn't show you how much it fell. See, they're using deceptive practices in this story on Yahoo because true, mortgage rates have fallen because the 10-year bond has fallen over the last 6 to 8 months, right? But over the last 2 weeks, they actually did the opposite. They went up, all right? It also says here, it says right here, that's more than a percentage point from the year earlier. So again, a year-on-year comparison, yes, that's a great comparison, right? Cool, they've fallen 1 point. But here's the problem. At what cost? What are the points? You see, a year ago, there weren't as many discount points being added in. See, what's happening right now is banks are failing, and they see, and the reason why they're failing, we saw a major banking failure multiples last year, right? But what's happening is they're seeing the consumer fail. They're seeing debt going higher. They're seeing cash flow and savings accounts decrease across the nation. They're seeing a stressed out borrower. They're seeing 30, 60, 90-day late notices going higher and higher on credit card debt, student loan debt, and things like that. So what they're doing is they're making it harder for you to get a loan, and they're adding something called a discount point. And they're saying, yeah, you know what? Rates have gone down. They were in the 7s last year. They're in the 6s. Sign here. Well, you'll notice that if you're taking a $500,000 mortgage out, they have a 1 point discount or origination fee now that they didn't have a year ago. That's $5,000 that you have to pay that you never get back, even if you refinance the house the next day. If you knew these kind of things and knew how to compare quotes and knew all this stuff, you would absolutely crush it because you'd know the difference between a good deal and a bad deal. But most people don't because it's not taught in school. The sad thing is, it says it right here, refinancing, and this is out of Yahoo Finance, refinancing applications were 175% higher than a year ago. The signs of life in the mortgage market follow a slow summer. Home buying season that saw many potential buyers stay on the sidelines amid limited inventory and record high home prices. First off, another fallacy. Inventory is exploding across the country. Year over year basis, totally different. We have more inventory today on the market nationwide than we did last year. Secondly, you have to understand that right here, when buyers are on the sidelines because of a slow summer, we have sold less homes in 2023 than we did in 2008. And 2008 was the worst number for annual home sales in that entire phase, that entire season, right, of multiple years being numbers added up. That means we are in crash mode right now. A lot of people don't see it, but this is what it looks like. The fact of the matter is, a penny saved is a penny earned. If you don't understand that, that's why you're poor. If you understand it, type 1 down below or type in, I do understand a penny saved is a penny earned, because it's money that you don't give to someone else. And when we're talking about refinances in the mortgage industry, you have got to be on top of your game, because I guarantee you this, your broker will keep secrets from you. And I talked to my insider that does a ton of loans and has ran big mortgage operations. And he said, no, they've went up and people have no idea what they're doing and what they're signing on. So if you want information, you want to save a ton of money. If you've never bought a home, I can tell you what, I'll make you a deal. I'm going to put the course for 80% off. It's $199 down below. There's a link for the next 24 hours. If after 14 days you've watched less than 50%, you go, my mind's not blown and I'm not going to save thousands and thousands of dollars from taking this course, and I'm going to keep saving it for the rest of my life every time I go get a new loan, well, then you know what? You can have your money back. How's that? I want to change this world. And how you change it is you keep money in people's pockets and you get them rich. And getting rich is how you change the world. I don't know what to tell you. If you think that hoping and praying in one hand, we need more money in this country. We need to make the middle class rich again. I hope you got something out of this. Links down below. It's good for 24 hours. Ninja is out.